In this video, we are going to look at trend lines, also known as sloping support and resistance. This video is aimed at beginners, but has tips that may help traders of all levels. We will go over what trend lines are, look at why they are such an important tool for traders, go over how to identify them, look at some common mistakes, and I will give you some tips from experience. We will start on these slides and then move on to charts and start using what we have learned. Okay, let's get started. So what are trend lines or sloping support and resistance? As the name suggests, they are used to help identify trending movements in markets, a market moving predominantly in one direction, and are a form of support and resistance. This is the Euro USD chart on the daily time frame. Here we can see a trend line, this one sloping support. It is supporting the market as it moves predominantly higher, a bullish trend. Here we also have sloping resistance. This is where the market is finding sellers as it presses higher. Since we have both sloping support and resistance here, it would be called a trend channel. This is a chart of Australian dollar US dollar on the 4-hour time frame now. Here we have sloping resistance. It is rejecting the market as it moves predominantly lower, bearish trend. In this example, we also have sloping support. This is where the market is finding buyers as it falls lower. Again, this would be considered a trend channel. Trend channels occur often when we have a trend line, however, not every time. Why are trend lines such an important tool for traders? First and foremost, they can identify high probability trading areas that will align you with the overall trend. They can also help you see the big picture in a market. Here we have our sloping resistance. It is rejecting the market as it moves predominantly lower, which is a bearish trend. We can use this to help us identify good areas to sell into this market, since we know it is following the trend line. Let's say we identify it here on these two swings. We may then choose to sell the next times the market reaches the trend line, say here and here. It also helps us identify the big picture. Lots of people will look at this move higher and think, this market is looking bullish, I need to buy. But we know better. We will look at a couple of recent examples of this when we move on to the charts. Now let's look at how to identify trend lines. In theory, it is relatively simple. However, it will take practice before you can reliably identify the best trend lines. We will look at different degrees of trend line and how they can give you a clear market picture when we move on to the charts. You are looking for at least 2 clear market swings to plot your trend line. Think clean triangles of price action. The market should be making higher highs and higher lows, or lower highs and lower lows. This is a simplistic picture of 2 market swings. Here we are making higher highs and higher lows. We will look at this in more detail on the charts. Here we are making lower highs and lower lows. We have 2 clearly defined swings. We prefer to look for sells when the trend line is falling, the market is bearish. We prefer to look for buys when the trend line is rising, the market is bullish. You may choose to discard this advice if there is a very well-defined trend channel or the sloping trend line is very clear and the market is respecting it in an easy-to-spot way. Breaks of trend lines are also very useful to help us identify a potential end to a trend. Look at what happened here on Euro USD on the 1-hour time frame when the trend line broke. We can also use this for potential trades, and we will look at it on the charts. What are some common mistakes with trend lines? 1. Trend lines are even more subjective than horizontal support and resistance. A lot of people try and pinpoint exact levels with a trend line and enter trades as soon as the market touches the level. This very often leads to losses. The market will often tear past the trend line to clear stops and trigger breakout traders before reversing. We will look at a crosshair identifying method I use when we move onto the charts. 2. People look for trend lines everywhere. As with everything in trading, you only want to focus on the highest probability setups. Look for trend lines that are easy to spot and show good reactions. 3. An extremely steep trend line with no clear swings often tricks people. They very often fail and do not show future reactions. If the market is dragging up or very closely following a following trend line, I discard them. This is following a trend line, but it is not creating swings and is instead dragging itself up the trend line. These often fail quickly and trick traders. We want to see nice, clearly defined swings testing the trend line. Now let's look at some tips from my own experience. 1. Use the crosshair approach of trend lines and horizontal support and resistance we will go over in the next section of this video. 2. A simple way to spot the level of the trend line is to look for candle tails quite near to one another that show the slope of the trend line. 3. Doji candles or pin bar type candles after a strong candle are often a clue as to where the trend line should lie. They are often market attempts to break the trend line and give us the clue. Here we see a large bearish candle and then a pin bar. This is often a clue that the market has tried to break the trend line and failed. The trend line would then strike through the pin bar just above the candle body. Here we have a large bullish candle and then a pin bar. Here, the trend line would often strike through the pin bar at the close of the candle body. This is also the case with doji style candles, which have small body and tails to either side. This would be our bullish example. Okay, now let's move on to the charts. We will pick out examples and start putting it all together. Okay, now we're going to move on to the charts and start putting together everything we've learned in the previous section of this video. So rather than simply picking random charts and then using historic price data to identify these trend lines, which is a little bit too easy and not realistic. I mean, anyone can load up a chart and use the historic price data and only pinpoint, the very perfect trading opportunities. So instead of doing that, I'm going to use 2 of the charts that I trade, and I'm going to take you through a few of the trend lines that I have used in my most recent trading. So the trend lines that I have used to help myself, and also trend lines I have used to help subscribers because it has helped me analyze the markets. I'll take you through how I identified the trend lines. I'll take you through why they were useful, and then I'll take you through how it was able to help me with my own trading. We're going to look at the Footsie 100 and the Nasdaq. Now, a lot of price action traders or people who watch trading videos, when they see analysis done or something explained on a market they don't trade, they automatically think, okay, this isn't relevant to me. That is not the case. If you use candlestick charts and you use price action technical analysis, it's transferable between whatever market you trade. So Forex, indices, commodities, crypto, whatever it may be. The psychology behind price action trading is universal. The psychology behind the market movements and our support and resistance levels, they are used across all of the markets that you can possibly be trading. Okay, so we're going to start on the Footsie 100. So there are 3 trend lines that I want to go over on this market. One of them is actually a trend channel. Now, what we can see is a very strong bullish rally here. It then comes to an end and we see a relatively strong bearish movement. So a trend channel helped me, first of all, identify the move up and then identify the potential end of that trend and the strong bearish movement. Now, after that, we started to chop sideways. As we started to move sideways like this, I was looking for a breakdown below this level to give the clue for potential bearish movements on this market. Now, when the bearish movements came in, We then found fairly significant support down here, and we had a strong bullish bounce. Now, as we're breaking down like this area here where we pause, a lot of traders are going to be looking at this as an area to get into sell positions to continue this bearish movement, especially after something like this very strong bearish candle. However, by using a trend line, and this would be using the trend line to give you the overall picture of the market, I was able to identify a potential level of at least sideways price action, but potential support for a strong bullish bounce. Now, this first movement here, very strong bullish movement. What we can see is, as the market is coming down, it's giving us very clean triangles of price action. There's two triangles. Now, two triangles is what we need at a minimum to start identifying potential trend lines. But as with anything in trading, we're really looking for very clear patterns, really clear market price action, something that's basically reaching out of the screen and just slapping you. It's so obvious. Because if you don't do it that way, what's going to happen is you're going to have lines all over your chart, and you're going to be identifying areas which are rubbish to trade from. You only want to look for things that are very obvious, very easy to spot. So here we have these triangles. Let's get rid of the lines. I mean, even just by looking at this, you can sort of picture a line running up it, and you can see that the market is following it. Now, down at the bottom here, we have a very significant bearish candle. We then have a pin bar up into this candle. It's giving us the clue that potentially the trend line is sitting just on top of that candle. Now, it doesn't always happen that way, but it's one of the clues that I look for to help me position these trend lines. Okay, so we can see the market here with the pin bar. We've also got a little pin bar here. We've got the market testing here. So first test, second test, third test. So potentially you identify this after two swings. It would be pretty good going to identify this after two swings, to be honest. They're not overly large. It's not giving an overly obvious level to put the trend line, but by the third test, certainly. So what does that mean? Potentially you can be looking at this to give you clues as to bullish entries when the market pulls back to test at this level. Now, this is actually a trend channel. We can see up above the market, it's fairly easy to spot on this one, is following a sloping resistance, testing multiple times. Now, with this one of the main ways I was looking at it was to give me a clue as to when this very strong bullish movement was coming to an end. As the market starts breaking down below the trend line, it was giving me the clue. You know, we've been following it so well and for such a long time that I knew as it started to break down below, we'd likely get at least sideways price action, but also I was expecting bearish movements. Do you think this is something useful to you as a trader? Of course it is. It's not only identifying the bullish trend, it's identifying potential profit-taking levels if you're buying into this trend, and it's also identifying when you should pause and start reanalyzing the market because potentially the trend is coming to an end. And all we're doing is we're looking for the triangles. We're then looking to see if we can line them up and if we can see the market testing multiple times and giving very, very obvious clean price action. So what about this section right here, where we got the strong bullish bounce? Again, it was a trend line that helped me identify this as a potential strong bounce point, which stopped me from just looking to continue selling. It made me a little bit more neutral and made me realize that potentially we'd see a strong bullish bounce. One of the ways to identify trend lines and make it a little bit easier for yourself is if you zoom out on the chart. And this basically, it cancels out a lot of the market noise and you can just start to see triangles. You can see the triangles fairly simply printing on the chart. You can also do this by using a line chart, which would be like this. It cleans up a lot of the noise for you. I prefer doing it on a candlestick chart and just zooming out. So this point here, how did I identify it? Well, the first thing is, let me get this right, it's down here. The first thing is, the trend line I'm going to put in, I'm also going to tell you when I identified it, because it's not always after two swings or even after 3 swings, that I can spot a trend line. That's normal. I'm looking for something that is screaming out at me and telling me, this is definitely a level that is being respected multiple times on this market. We can see a triangle here, another triangle here, another one down here, and then you could say another one right here. So that was the initial clue that potentially we're looking at a trend line. Now the other little clue was the fact that we had made a triangle right here. And what it looks like is this triangle presses up and it comes down and tests at this triangle, and then we continue to make that higher low, higher low. So it's little bits of evidence that we're sort of putting together, and it's giving us the clue that potentially we are looking at a trend line. So if we mark this in, now we've got the test here, which we want to include because it's very likely if this is spiking up and rejecting like this, it's rejecting off of something significant. We've got the trend line testing at this level. We've then got the initial triangle here. We then come down again. We get a significant candle here, a little bit of a doji candle into that candle. So potentially it needs to come down a little bit. But then we've got another significant candle with a little pin bar here, giving us the clue that potentially it should be sitting above it. And then we've also got this, the market sort of riding along the trend line. It's trying to break below, it's closing above. It's trying to break below, it's closing above. It's giving us this slant. That's sort of the clues that I'm looking for. It's things that are going to make it very, very obvious. But as I mentioned, this wasn't when I identified the trend line. But if you did, potentially, you get it here, you identify it there, twice, 3 times, and potentially you're looking down here for potential bullish positions. For me, it took these spikes right here before I could start to see this trend line. Because I knew, looking at this and dragging it through to here, that it was also testing at this potential trend line. If we drag it forward, we can see the market testing at this level, trying to break down multiple times and failing. If we extend it further, we can see the market bouncing off of it, coming down, again bouncing off, again bouncing off. We break down, we come up, we reject off of that level, we break down, then we break above, and even as we break above, we spike down and we test, and then we press away. So this is the market giving me multiple areas of evidence to spot this trend line. And now I know it's significant because this is 2016. We're on the daily chart. This is 2018. So it's spanning over years. What can we see as we break up here? We're testing and falling away. Multiple identification locations on this chart. So as we started to break down, I knew that potentially this bearish trend, the strong bearish movement would come to an end and we'd see some sort of a bullish bounce. Now, this is when I started using the crosshair methods because sloping support and resistance is very subjective. You can plot them anywhere. You can start to have hundreds of them on your charts, and maybe I would be looking at this and I would have one here taking this spike and then this swing and this swing. Maybe I'd have another one coming across here because I can see this spike and this spike and this spike. So because of that, I don't just want to use trend lines to trade from. I use the crosshair method, and that is using horizontal support and resistance where it crosses over with the trend line to make the crosshairs, and that gives me high probability trading areas. So to the left, we have significant levels of support and resistance. You can see test, test, multiple tests, test here before we break up. And if we come to the left, another test here. So as the market started to break back down toward this level, I was using the crosshair methods to look for potential reactions and bullish positions. And this is when it starts to get really powerful because it's giving us the overall view of the market on a longer term perspective. We're looking at it over years here rather than simply taking into account the most recent movement. It's telling me that not only are people who watch horizontal support and resistance going to be watching this area for positions, but there's also people looking at this trend line. So that's maybe two separate types of traders coming together. If I start to see good price action down here, I know it's going to be a good area to look for potential trades. That's when you start sort of putting your trading plan together, using these methods or using these levels to find good trade opportunities. Very, very powerful. Now, I also want to show you one on the 30-minute time frame. What I'm actually going to do for this one is I'm going to load up the chart that I'm using at present, which is here. So this has got a lot of markings on it. You don't need to pay attention to too much of it. We have got a trend line on the 30-minute time frame that I have been using for the past sort of couple of weeks, and again it was used today. Now, as the market broke up here, we started to make these triangles. So if we bring on the line chart, just to clean it up a little bit for you, we can see the triangle, zoom in. You can see the triangle, the triangle, the triangle. As we come down, we're getting another triangle, and we can see the market testing at these levels. What we can also see is right here, the market is sort of spiking down and it's giving you that slant. So it's one of the clues that we're looking for. If we see a slant like this, it's sort of the market telling you that it's chopping down, but it's finding something and it's bouncing back up again. And if it's at a slant, it's very likely going to be a sloping support and resistance level. So I lined it up with the triangles, 1, 2, 3. You can actually see here, these spikes are at a slant. Okay, 1 and 2, very close to one another, it's giving the clue. Then we come down, we've got this third spike. Again, it's lining up with those spikes. It's giving the clue as to where the trend line should be sitting. Now, why is this useful? Well, first of all, multiple tests. But one of the other ways it was very useful is as we started to break up above here, it gave me the clue that potentially this trending movement was coming to an end. I was able to switch what I was looking for and start looking for either sideways price action or more bullish movements. And then, as the market started to crash back down again, I knew this, which had been used as sloping resistance, was now possibly going to be used as sloping support. Market comes down, it tests. Use the crosshair methods. If you've got horizontal support and resistance, you can start looking for potential trading opportunities. Now, just into today, we broke back down again. So what's that telling me? Potentially, the bullish movement is coming to an end. We break back down, we pull back, we test at it, we start to get the rejection, and we've had another huge move down. Sloping support and resistance is very, very powerful. All you need to do is get used to identifying the triangles on the charts, only looking for the very obvious trend lines and trend channels. It's very easy when this breaks up above like this to start thinking, okay, maybe this isn't a trend line anymore, but you're looking for little clues like these sloping spikes. As the market breaks down, it starts testing at it again. It's giving me the clue that over, let's have a look, this is the 28th of September, all the way down, we could say to here, till the 2nd of October. Now this is the 30-minute time frame, so that's a fairly significant amount of time. It's giving me the clue that potentially in the future, the market is still going to be respecting these levels. As soon as we broke below, came back up, I knew this market had a very high probability of making further strong bearish movements. Okay, now we are on the Nasdaq. Again, we are on the daily time frame, and what I'm going to do is pinpoint a significant trend line that has been used on this market for a significant amount of time, and it has helped to pinpoint the bullish trend. And it has also been very useful recently for myself to start to spot potentially the end to the trend, meaning that potentially we're going to have sideways price action or stronger bearish movements, which is exactly what I had been looking for the past few weeks. Now, very, very easy to identify, again, triangles. Significant triangles. We don't have to really struggle to see these on the chart. They're very, very obvious. That's the first thing we are looking for. Very easy, okay? When you're looking at the charts, you should be able to spot it pretty quickly. One of the ways to do that is just to think to yourself, when you're looking at the price action, if I took a ruler and put it up against my screen and lined it up with the price action, would the market be following the line of the ruler? If it is, then it's very likely going to be a trend line. You can actually get a ruler, or you can get a sheet of paper and put it up against your screen, and you can start to look for them that way, you know, lining it up with the swings and trying to perfect it, seeing what works best. So with the first two triangles here, first of all, we've got the significant bearish candle, and then we've got the doji right here. It's giving us the potential clue. That is where we're going to be looking for the trend line. Then we've got a further clue. That's what we're looking for, just any sort of evidence to help you pinpoint where the trend line should be. Here, significant spike up, we're closing back underneath something. This is testing something. It's trying to break above it and it's failing. Potentially, we've got a trend line cutting through it. As we come up, let me bring this down, bring this up a little bit, because significant candle and a doji candle. It's just giving us clues. It doesn't mean that this is where the trend line is going to be sitting. We figure that out as we go. And there's nothing wrong with adjusting your trend line. Now, a couple of key clues here to the trend line location. So first of all, 1, 2 tests. We come down and we're spiking down and testing at this level again, again, and again. The real sort of clue that this is where the trend line should be comes here. So again, we're spiking down, but now what we can see is if you just follow the line, it's following very closely the line of this price action. So this is opening and closing above. This is opening, spiking down, but closing above. This candle here is spiking up, trying to close above, and then it's failing. As we break up, we're coming down and we're testing. It's giving us really the line of the trend line. It's giving us that clue. Now, potentially, after the 2 initial triangles, you've identified it. Potentially it takes you the third one. And then you're looking maybe here for your potential bullish opportunities, here for your bullish opportunities. There's also nothing wrong with having your trend line like this. So now we're taking the close and the open of the candles, and we're just sort of following the line all the way up, and we're taking the close and the open of the candles up into here, the close and the open of the candles, and it's still lining up nicely. What this would be for me is a sort of trend line zone. It's not an exact level. I'm sort of looking at it as like rail tracks. In between the rail tracks is the area that I'm interested in. So first of all, multiple potential bullish opportunities on the move up here. Why was this also very useful? As we started to break down below the trend line, you know, significant breaks below, accepting below this trend line, I knew that potentially this bullish trend was coming to an end. I actually started to post this up on one of the Sunday analysis videos and got a little bit of a heat from it, because Nasdaq has been going up for so long that everyone was, you know, sort of the opinion that it's just going to continue. It's just going to keep going, and to look for weakness in this market is stupid. But I knew, because it's starting to break below a significant trend line, that we were either going to have potentially, not always, some sideways price action or bearish price action. So we break down below, and now what are we doing? Now we're pulling up and we're testing as resistance, here, resistance, multiple tests, and then a strong move down. And we're coming down, we're actually testing at fairly significant levels on the Nasdaq right here. And if we start to break down below those levels, then really the next likely move is another strong move down on Nasdaq. But anyway, very, very useful to identify these trend lines. And what we're doing is we're just using the triangles. You can even do this on the line chart. Look how much cleaner this is when you are first learning. Just look at the spikes. Just line up the spikes into the trend lines. Multiple tests, okay? You don't want to overcomplicate it. You don't want to overthink it. You're just looking for the ones that are very, very obvious. If you can identify those, they're going to give you some very nice trading opportunities. For example, the market comes down, it starts pressing back up. Lots of people were looking at this as a pullback on a bullish trend, and then they were looking for a very strong move up, and they're just buying, looking for a continuation of the bullish trend. We know, because of the trend line,
significant trend lines, that potentially that is not the case. Do we have significant support and resistance up here? We have the all-time highs. Yeah, a fairly solid level to watch. We also had the 7,700 round number, which is sitting just here. Again, a significant potential level of resistance. And that's looking at round numbers, something totally different. It comes up, it tests at the trend lines. We're using the crosshairs method of horizontal support and resistance. We've also got the round number in there as another confluence. We've got the trend lines. It's giving us very good high probability trading levels.
For the final part of this video, we are going to spend a few minutes simply picking out sloping support and resistance levels. We're now on the Forex pair Australian dollar US dollar on the 4-hour time frame, and really this is what you should be moving on to do. You want to start practicing picking out only the most significant trend lines, and the only way you're going to get good at doing that is if you start to practice. Now, as I've mentioned, using historic data like this and just running over the chart is a lot easier than when you are doing it live, but it's going to start to sort of train your eye to spot what you are looking for. And then you can start to do it in real time, and you can kind of paper trade with the sloping support and resistance that you start to spot. So the most recent price action we can see on this market, we have a nice solid triangle of price action. As I've mentioned, if you want to, you can simply go onto the line chart. And what you can see is if we go onto the line chart here, it's giving us 1, 2, and 3. Fairly easy to spot. Now, potentially, you would be looking for some sort of a trend line as the market is doing 1 and 2 tests, and then as the market comes up for a third time to retest, potentially you are watching it as sloping resistance. What we can also see is as we're pressing back up here, actually one time here and twice here, we're also retesting at a fairly significant level of what was support breaking, retesting as resistance. Now, as I've mentioned, you can start to spot these sloping support and resistance levels all over the chart. So you're only looking for the most significant ones. Here we have a nice solid triangle. And here we have another one. Very, very easy to spot, very, very nice, clean price movements. Now, if we strike through both of those levels, what we can actually see is, well, first of all, the test here. On this second test, let me just get rid of a couple of these trend lines so you can see better. We have a significant bullish candle here with a doji candle right after. So that's giving us the clue that potentially the sloping support and resistance is just at the close of this candle. Now we've got 1 test, 2 tests. As the market is starting to break up here, we're getting a very strong bullish movement. Lots of people are going to be looking at this as potentially the start of a strong bullish trend. But by taking that big picture of the market and using trend lines, we can see that potentially we're coming straight into key resistance. And this right here is basically the bulls trying to continue the bullish trend, and it's also breakout traders looking to trade the breakout. And then we get the rejection and we get the very strong move down. So you could potentially be using the more significant trend line along with this shorter term trend line to give you sort of a double barrel bearish position. It's giving you 2 different confluences coming together that potentially this is a good area to sell. And then if you add in that crosshair method, then you've got a third confluence and you start to look to trade your trading plan at this level, potentially a very good trading opportunity. If you're looking here, we can see a triangle, a triangle, a triangle. If we go into the line chart, you can see it a little bit easier. 1, 2, 3. If we are connecting them up, you can see the market testing once, twice, and then we start to break. So this trend line, you could actually call it a trend channel. As we start to break, it's giving you the suggestion that potentially this bullish move is coming to an end. And we can expect either bearish price action or some sort of sideways chop. So very, very handy things to have in your arsenal. Now, as I've mentioned, I won't just trade from these because
for me personally, they're not enough by themselves. But if you start to add in other things, they can give you very good clues as to what the market is doing. So nice clear triangle, nice clear triangle, nice clear triangle. We get a bounce, then we get a break. Potentially the market is going to move sideways, or we're going to start seeing more bearish price action. So let's see if we can find another of a couple of relatively significant ones. So here, well, first of all, we've got the triangle, the triangle, the triangle. So the first two would give you the potential clue. A significant candle with a pin bar up into it, so potentially we're starting here. Then we sort of scrape this up like this. What we can see is the market once, twice. We don't really get a test here, but when we break, it starts to give us the evidence that potentially we're going to see sideways, or we're going to see the start of something more bearish. Now, as we start to break down through this one, we've then got 1, 2 clear triangles. So potentially, this is giving us some sort of a clue. Now, I'm going to drag this all the way down because I can see this one is relatively significant. We don't know this is significant until the market starts to give us evidence. By using this as one of our tools, it can help us get a very good picture of the market. So 1 test, 2 tests. We're breaking down below what was potentially the bullish sloping support. We then come back up for a 3rd test of this potential trend line, and we get a very strong move down. As we start to come back up, we break up above, we pull back, we test. Now, sloping resistance is becoming sloping support. It's giving us the clue that potentially the bearish movement is ending. We're going to see either bullish or sideways price action. So relatively simple to do. All you need to do is go onto the charts, start picking out the nice clean triangles, either making the higher low or the lower high, and then start marking them in. Nice doji candle, relatively strong bearish candle, not overly significant. We then strike the potential trend line, looking for potential clues as to where it should be lying, like this spike down right here. It's obviously touching on something. Potentially it's this trend line. Market breaks up, breaks down below. This is a little bit more choppy. This would be one of the examples of when the trend line isn't acting as significant support and resistance. Let's look for maybe 1 or 2 more. So there's probably going to be a relatively significant one here. So first of all, there's a very, very steep trend line. Like this. Okay, so we've got a triangle, a triangle, a triangle, a triangle. Then we start to drag down the sloping resistance level and we start to break up above. As we start to break up above, it's giving us the suggestion, potentially we're going to see some bullish price action or sideways price action. Now what we can also say with this one is potentially we've got a nice, solid, larger triangle. So this whole section of price action will be 1, potentially 2. Now we've been given the clue. We want to look and say, okay, do we have some sort of a trend line here? As we make this 3rd one, you can see we're looking for the clues. Look at the angle of the pins at the top of these candles. They're sloping on something. It's very likely sloping support and resistance. Market comes up, it tests, a little bit of rejection, we break up above. Potentially we're seeing an end to this very strong bearish movement, and we're going to see some sort of bullish or sideways. Okay guys, so that is everything for this video. As I've said, it's a good idea to get some practice doing this. You want to start being able to spot it, first of all, on historical price data, but then as the markets are forming these swing points, these triangles of price action. It's a very, very good tool to have in your trading arsenal. So as always, I hope that was helpful. I hope it helps you with your trading. I'm James Orr, and thank you.